Hi guys, so welcome back to the channel. So as you already know, I have been away for some time because I haven't been feeling well for some time, but I'm getting better. I hope you are doing well. I hope you are improving in your trading and your families are doing well. So as I had promised you guys in my previous video, I'm supposed to be sharing about uh, funding programs, prop firms, and how you can acquire some funding from these companies because many of you have requested me to do so. But then there was a trade I took on DAX on when was that? I think it has to be Friday. Yes, it has to be Friday, and I have received so many DMs that the setup was a bit confusing for some of you and requested me to go through it. So I was like, okay, before I go into prop firms, let me talk about the trade setup, and then on the next videos, I could start talking about funding programs. All right, so you already know I do my markups. If I start from the daily, you see all my annotations. We have here liquidity pools right here, have liquidity pool right here, and we have this that was a liquidity pool right here. So you see how I do my markups for market structure. You see, right? Breaking structure. This was actually a liquidity grab. Then breaking structure, price comes back into here, break structures to the upside. But you see, when price starts extending higher like this, right? This formation, um, I don't like it actually because um, such extension is actually most of the times an invitation for price to drop to the highest or the bit to what, how do I say, to it drops to the recent um, structure that is high probability. Is it high probability or biggest structure, whichever you call it, but as long as you understand my point. So this is H4, this is H8, and we have this structure here, right? Even though price came back into it, however, let me see, not even up to 50%, but you can see this applying that goes this way. This is not a normal way of price delivery, of which I believe price, we could see price grabbing liquidity from here, and then we see it coming down all the way into this structure, because in this area here we don't see any structure of which price has to respect. The only area I see that has a high probability market structure is here in this area. All right, but basically you can see how I do my markup for breaking structures. I don't leave any unmarked. You can see how price keeps making structures, coming back into them. You see, you see, same thing over and over and over. But by the way, there is something I mentioned on excuse me. Yeah, there's something I shared on Twitter with you guys and Instagram. I said when price has taken buy side, either buy, let's say buy side liquidity, or and then the only valid market structures are bullish structures. So any structure you see, right, that is bearish structure after price has run on sell stops, that is invalid. When price makes when price runs on buy stops or takes buy side liquidity, same thing, then only bearish market structures should be valid, and anything that tells you to buy any bullish structures is invalid. I give you an example. I'm not supposed to. Anyways, let me go ahead. So we see price. This is previous day's low, right? We see price liquidity pool, right? Let me put some dollars in there to show that it is a pool of liquidity. So we see price running through this low, grabbing, taking orders from here, but we see this structure here. If I move to M30, can you see it? Look at that. This is a valid break in structure. This is a valid break in market structure. And price respects, if price is bearish, it will respect highs and disrespect lows. And when price is bullish, it will disrespect lows. I mean, it will respect highs. It will no. Let me go through that again. When price is bullish, it will respect lows and disrespect highs. Okay, let me put that in this so that you could see it. If we are bullish, so price will respect this low, but it will disrespect this high. It comes back, respects the low, disrespects the high. Okay, so we are respecting this low, but we take out this high, and then price comes back into this um, structure. Price has to respect this low, but then this high has to be taken out. That's what I mean. Okay, so now we see price comes from this high here, this high. Price makes this structure, first structure. Price comes back into it here. Let me zoom in. Comes back into it. Let me remove this. Supplies comes back into this structure. Then we fall. Remember, all these are minor structures. Why? Because we are in a bigger picture. We are in a bigger structure in here. So all these structures are being formed only to mitigate the orders that are into this bigger structure, which is the major structure. Supplies is falling down, but then we create another structure right here. So we expect when price comes back, it has to respect this structure to continue going down. And this is where you need to understand price action and be able to read what the market is doing, the footprints of the smart money algorithm, right? So price takes this liquidity. I'm a liquidity trader. That means I don't trade unless I see liquidity and market structure. They need to respect each other, right? So now I have this structure marked up, right? But then suddenly, as I wait for price to come into here so that I could sell, price takes out this liquidity from this low, which happens to be previous day's low. I put this, there you go. Can you see these small vertical lines? This is a new day from here to the closing. This is a low, a high. Price comes, takes out a low. Okay, can you see that? Should I zoom in further? Takes out this low. Now, this is why you should be able to understand the market you trade, the asset you are trading. You have to understand it, the movement, how it moves, why it moves, what time it moves. I'm a good trader of DAX. DAX is my best asset, and I understand DAX will not move until it takes out liquidity. That is something I can assure you of. It will never make any major movement until it runs on stops. Buy stops, sell stops, it has to take them out before it can make any major movement. I can assure you of that. So I understand how this thing moves, right? So the moment I see price coming, if I move to H4, and no, H2 rather, yeah. Or let me just stay on H1. You see price breaking structure, comes back, creates a minor structure to sell, but then takes out this liquidity. If price had not taken this liquidity, let's say price came from here, touches here, then came back into here, I would sell into this liquidity pool. But then price never gave me that opportunity. It came down, took out this liquidity. I still have this marked up. The moment price takes out this liquidity, I immediately cancel. Not this. I should be canceling this. I immediately cancel this structure. It's cancelled. Why? Because if buy side sell stops have been taken out, it means price is going to go for what? For the buy stops, right? And so my eyes are no longer here. My eyes are now right here to the buy stops. So this breaching structure right here, it is cancelled, and I remove my markup. And then I go to the M5. And what I'm looking for is price to take out a structure, preferably a structure that has taken out these sell stops. So price takes out this high, I mark it as a breach or a breaking structure. I wait for price to return into this structure here, and then boom, my entry here, my stop is below this low. Why is that? Because if this move here took out these sell stops, then they are no longer interested in bringing price all the way down to break this low. So my protective stop has to be here below this low, and my target can be here Or if you have, I closed right here 1:4 right here because this was news, and when it came I had already closed my trade. 1:4 is really fantastic, guys. You don't have to target 1:5. I mean 1:10. I get 1:10, 1:7, 1:8, which is brilliant. I don't take anything that is less than 1:3. 1:2, I don't take it. I don't take it. My minimum is 1:3. So 1:4. And secondly, you can see how price action wasn't clear. And then we are moving into New York session, meaning I have to go look for more opportunities in Nasdaq or US 30. So I have to close this DAX, which moves, which has good moves and clear moves in London session. So 1:4, and I'm out. Right? As simple as that. So I just gave you an example of what I posted on Instagram and Twitter. When price takes out, I give you another example. One more example, and then I end the video. One more example. So these are days divider, right? So this is a previous day. We have a new day opening, right? We have price taking out previous day's high, which is a pool of liquidity, right? It takes out, then we break structure, but London is not open, the Q zone is not open, so we ignore anything we see here. Another breaking structure, then where is London opens on this bullish candle, right? Then price comes back into this structure. Now, why is this structure valid? Because buy stops have been taken out, and now price is going to seek for the sell stops, either from previous day's low or from this old low. This is what I refer to as an old low, and you can see it has been taken out, right? So I entered here, I held all the way from here to this low, over 80 pips. But then if you mark up this structure, this as breaking structure, price comes back, you see how it took you out. Why? Because this structure you are marking is not valid. Because price delivery now is too bearish to take out orders from here, because we just took out buy stops. Now we are seeking sell stops, right? This is how you choose the right market structures. You are picking wrong structures. This is not valid. Okay? You see? You see how I mark up my structures? Now, if look at this. Price came here, respected this structure because there is a breaking structure here. Let me mark it actually. We have structure, price came, respected it. Then price failed to take out this liquidity pool here. This low, price fails to take it out. We actually come, takes this high. After grabbing liquidity, what does that tell you? It means since price has taken out these sell stops from here, it means these, I'm sorry. Now wait just a second, guys. It means that this breaking structure is not going to do anything. So any sales from here, you are taken out. And that's why you can see the breaking of this high. Look at this candle, right? Look at this candle. And you see this high, price took it out. So from here to here, if price was going to come into here like this, we target here because this would be a breaker. This structure becomes a breaker block. So what do I expect? Probably price to go into here, mitigate this imbalance, cover it, come into this structure, and then maybe we go for this liquidity pause. So I hope you found value in this video. Stay well, stay blessed, guys. And guys, remember, take care of yourselves. Take care of yourselves. Take some time off the charts, right? You need to allow your mind to relax. You need some rest, and so that you could have a clear mind when you come to the charts. So yeah, until next time, guys, stay blessed.